New holding stock is actually down in reaction to Q2 earnings, which reported revenue that was better than expectations and purchase volume that actually climbed over the quarter. So in this video today, I'll go over the most recent earnings. I'll go through some of the financials for the company. And then at the end of the video, I will give a price prediction based on the chart and technical analysis. So with that being said, let's jump right in. So here we can see that continued growth of the world's largest digital banking platform. We saw that again here. So current customers are 85 million, which is a $18 million, actually 18 new million customers year over year, which is 94% of the adult population of Brazil. And then there's 82 monthly activity rates, 82%. And then U.S. revenues were $1.9 billion. That's in U.S. dollars. And then gross profit is 42%. We have a 42% gross profit margin. And then net income was $224 million. So overall, these numbers were very good for the company. And then we can see here that revenues have been on a steady decline at a 5.3x since 2021. And then compounded annual growth rate of 42% for customers. And that's their customers have actually doubled since 2021. And then gross profit has went up 450% since 2022, or excuse me, since Q2 of 2021. And then net income is finally positive. We saw a big jump over the past quarter as well, from 141 million in Q1 to 224 million in Q2. That's a 53% growth rate quarter over quarter. And then we can see a couple of their customer numbers, which are really just astonishing. So active customers was 68 million, which is a 32% year over year gain. And then active credit card customers was 37 million, which is a 27% year over year gain. And then active customers up 10 million, which is 121% year over year. And that's new invest active customers. And then we can see active accounts, 34% gain year over year. Active personal loan customers, 76% gain year over year. So all their customers continue to grow. And we can see revenues have been on a steady decline, and we saw somewhat of a drop, or just really a slowing in terms of increases from 2022 to Q3 of 2022. So we're seeing that pace of increases kind of pick up here, with over a 60% gain year over year, which is very solid. And then gross profit, we saw that hit highs at 782 million. And then, margins obviously have increased drastically, up 42%. And then we talked about those net income numbers. So you can see here that that customer growth rate has been awesome, and it's definitely something that is a great growth driver for the company. As a driver of shares, is definitely a tailwind for the stock. And we can see these revenues here have also been on the steady rise as well. And then we have a compounding effect on customer growth and higher limits amplifying purchase volumes. So they have higher limits, for their cards, which is amplifying purchasing volume for the company. And we can see their total portfolio is mainly with credit cards. So 81% of their portfolios in credit cards, 19% is in personal loans. And we can see personal loan origination has actually increased since Q2 of 2022. So we've seen a good jump since then, at 7.3 now, with a 6.1% credit card yield. And then net income margin expanded as interest rates rise. So we saw 133% jump in net income margin, and that's basically just the difference between what they make on money that they get and then how much they actually charge for their credit card services. So that is definitely a good sign for the company. Net income margin is on the rise. And we see stable cost to serve the customers as well has been pretty stable. So that's obviously a good sign for stocks, for the stock, and then gross profit margin has been on the steady rise. So with that being said, let's take a look at some of the fundamentals for the company. And this is an article written by Q Capital here. So New Holdings, a Brazilian digital bank, has seen significant growth since its founding in 2013 and is well positioned to continue this trend, capitalizing on the increasing demand for digital banking services in Latin America. New Holdings is a Brazilian digital bank that was founded in 2013. As I had said, the company has seen a lot of growth since then and is well positioned to continue this trend. This growth coincides with an increase in demand for digital banking services as the global utilization of mobile phones grow, which has been especially notable in Latin America in recent years, as New has capitalized off this growth and become one of the leading players in the financial tech industry in Latin America. While there are risks associated with increasing competition in the region and the possibility of the economic slowdown in Latin America, New's prospects represent a unique opportunity for investors to capitalize on large long-term growth of a company that will inevitably become one of the largest players in the developing Latin America fintech industry. New Holdings offers a wide array of financial services and products to their customers in Latin America. Their main revenue drivers are New Bank and New Credit, New Invest, and New Insurance. They have over 50 million customers across Brazil and more recently Mexico and Colombia. Their disruptive business model stresses ease of use for consumers, coupled with broad product offerings, a strategy which makes the proliferation in new markets more successful than their competitors. Their stock is currently trading at about $7.70, which is about a $34 billion valuation. The Latin American digital banking and financial tech industries are still in early stages in development, but we have seen a lot of rapid growth in recent years. This growth can be mainly attributed to the increase in wealth in the region, particularly in the middle class, and the growing utilization of smartphones. So we can see here that the fintech ecosystem in Latin America markets have been on a steady rise. We can see here that by country, Brazil kind of leading the charge here, that these fintech companies have been growing at a steady pace, and we've seen a lot of new ones pop up. In 2017, in Brazil alone, we had 230 fintech companies. Now we're at 771, which definitely signifies that we're seeing some new competition come onto the market. But it does definitely seem like New Holdings has the first mover advantage and is kind of the player to beat, if you will. So with that being said, though, let's take a look at the company's financial metrics. So we can see here that the company doesn't have a positive PE. It's not PE profitable, but we do have a price to book ratio of 7.1, which for those that don't know means that the market cap is trading at a book value that the market cap is trading 7.1 times its book value, which is well above the sector median at 1. And then we can also see that the growth metrics are very good for the company. So year over year revenue growth is at 113%, which is well above the sector median at 7%. And then revenue growth for the next 12 months is projected to be at 77%, which is well above that sector median at 5%. So once again here, these growth numbers look very good. And anytime you have a company that is trading at a valuation that is very high, you always want to make sure that the company has high growth prospects to kind of rationalize that valuation, which New definitely does have. And we can see here the gross profit margin is at 100%. And for those that don't know, that basically just tells you what a company makes on what it sells. So gross profit is just simply cost of goods sold minus revenue. So this 100% number is a very good one for the company and is well above the sector median at 59%. The company also has 90 cents in cash per share, which means that it has almost 15% of the market cap in cash per share, which definitely does give the stock a decent floor. But with that being said, let's take a look at how these financials compare to the closer peers here. So Canadian Imperial Bank, United Overseas Bank, and others here. So let's see how this balance sheet looks for the company. So in terms of total cash, the company has $4.4 billion in cash, which is $3.5 billion more cash than debt, as New Holdings has $800 million in debt. This tells me that the company is in a very, very healthy spot to fund its future operations, which I do really love to see. So the company is, has definitely a fortress balance sheet. It does have a significant amount of money on the balance sheet, but this is pretty common amongst the peers as we see a healthy balance sheet position as kind of a staple amongst the peers. And then we can see in terms of profitability, the company ranks out pretty solid in terms of profitability, but in terms of net income margin, we do see that the company is actually the worst amongst all of its peers. And then the 3-year compounded annual growth rate is at 77%, which is well above all its peers. So in terms of growth, the company is definitely the best player in the peer group in terms of growth. And then 3 years out, though, we're projected to have a 15 times PE, which is actually right in line with most of the peers trading at about 10 or less. So when you consider that growth and how close the company is towards profitability, I do think the valuation is definitely rationalized with those growth metrics. With that being said, let's take a look at the analyst ratings on Wall Street for this company. So we see 8 different bullish ratings on Wall Street, and we see 1 bearish rating. So overall, you can definitely say that the general consensus is a good one for New Holdings, and that generally markets are quite bullish on New Holdings, and Wall Street has a general consensus that the stock is a buy here, as the consensus price target is actually at $8.29, which is below the current market price. The lowest price target is $6, and the highest price target is $16. So this is basically Wall Street telling you that the stock has a high likelihood of moving higher. And the most recent upgrade we got was from June in UBS maintaining their buy rating and increasing their price target to $8.50. With that being said, let's take a look at how the stock looks on its chart and see if we can't give a price prediction based on technical analysis. So we're coming down to test this 50 DMA, which is where shares had bottomed in the last 3 trading days. So this 50 DMA is likely going to continue to act as support for this company. And momentum is on the side of the bull. So we're trading above all daily moving averages, and the 50 DMA crossed over the 200 DMA in March, which is known as a golden cross and implies long-term bullish momentum. So we have bullish momentum here. The real next major level of resistance is about $8.30, which is where shares had topped out in July of this year. It's also where shares had topped out in April of 2022. So I would want to see a move above this resistance level before I kind of said shares were a high conviction buy. If we get a move above this resistance level, I do believe we see a move higher for New Holdings over the coming weeks to months. The question is how high? Well, I think we could get a move up to about $10.30, which is where shares had topped out in January and in February of 2022. So I think we can get an easy move from about $8.30 up to about $10.50 over the coming weeks, assuming there isn't any major stock sell-off throughout the market, and there isn't, and we're actually able to move above this $8.30 level and hold this past resistance level and make it new support, which I do think would happen. So be on the lookout for this $8.30 level. If we break it, I think we move up to $10.50 pretty quickly. So I hope you enjoyed that video. broke down a lot. I do think this company is a pretty interesting fintech name, and you don't really hear a lot about it. I do think this stock could be one that we look back on in 10 years and say, shoot, they were growing their customer base so rapidly, but you know, many investors waited till the company is profitable. Me, I'm a bit of a safer investor. I would personally wait until the shares, until the company as a whole became profitable, and obviously turned EPS positive. But the opportunity is very intriguing in this name, and anytime you have massive jumps in customers, you should be leading towards profitability, right? I mean, customers is always the first thing that kind of shows when you're looking for a stock to kind of move towards profitability. So it is good to see that that customer growth is immense for this company. So I do think this company is an interesting stock, and you definitely should keep it on your radar. But with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.